Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Geopolitical friction is rewriting global energy flows and forcing rapid asset reallocation across emerging markets. In Africa, traders in Lagos, Nairobi, and Johannesburg are executing a decisive pivot toward precious metals. They are leveraging technical hedging tools to shield portfolios against severe local currency volatility. Gold and silver are no longer just safe havens, they are primary liquidity buffers in 2026. Meanwhile, state intervention is intensifying in the energy sector. Brazil has extended diesel subsidies through July 31 to stabilize domestic transport costs. India has cut export tariffs to keep domestic fuel prices competitive. Austria has eased price controls on heating oil. These moves are direct responses to Strait of Hormuz closures driving global oil volatility. The supply chain shock is immediate and politically sensitive. Taiwan is taking a different approach. CPC and Formosa Petrochemical are maintaining gasoline and diesel prices for the 9th consecutive week. This freeze persists despite mounting corporate losses and heightened Middle East tensions. The strategy prioritizes consumer stability over short-term margin protection. It signals a long-term view of geopolitical risk that refuses to pass costs to the end user. On the macro front, U.S. fiscal policy is shifting tone. Treasury Secretary Scott Bessent called for fiscal contraction on Fox News. He cited economic resilience and the end of global tariffs as key factors. The administration is navigating a fragile recovery. The message is clear, stimulus is out, discipline is in. This stance will likely strengthen the dollar in the near term. In related news, the crypto infrastructure landscape is evolving. Premu has launched decentralized prediction markets with 2.5x leverage. This platform challenges the dominance of Polymarket and Calshare. The introduction of leverage changes the risk profile for event trading. It attracts institutional capital but increases systemic fragility. Watch for volume shifts between these platforms as they compete for liquidity. Looking ahead to today's release, the manufacturing data will set the tone for global growth expectations. At 1:45 Universal Time Coordinated, China releases its manufacturing PMI. The previous reading was 52.2. A contraction here would signal deeper weakness in the world's factory. Then, at 1400 hours Universal Time Coordinated, the United States reports its ISM manufacturing PMI. The previous figure was 52.7. Any miss below 50.0 will trigger a sharp repricing of U.S. rate cut expectations. Japan's capital spending YOY at 2350 Universal Time Coordinated and South Korea's exports at midnight UTC provide early clues to Asian demand. Germany's retail sales at 6 o'clock Universal Time Coordinated will test European consumer resilience. Turkey's GDP growth forecast of 3.1% YOY will be closely watched for signs of stagnation. Markets are pricing in a bifurcated world. Energy hedges are up. Fiscal discipline is the new mandate. Prediction markets are adding leverage to political risk. The data releases today will confirm whether this trend holds or breaks. That's your market briefing. Follow Rumour with AI for daily market intelligence.